Assalamualaikum warahmatullahi wabarakatuh, and we are back again to cover the last topic for chapter 5. Right, so to recall back, previously we have covered the principles of momentum and then followed by simple moving average, double SMA, EMA, envelope, Bollinger Band, right? And then followed by moving average, convergence, divergence, relative strength index, and rate of change. And now we will continue and we will finish our chapter 5 with stochastic oscillator and William percentage R. This is the list of indicators or oscillators that you are going to use in your assignment as well as for your general knowledge. Okay, what is stochastic oscillators? It is a technical momentum indicator that compares a security's closing price to its price range over a given time period. So stochastic studies or oscillators help monitor a trend's sustainability and signal reversals in prices. The oscillator's sensitivity to market movements can be reduced by adjusting the time period or by taking a moving average of the result. The oscillator range from 0 to 100. The traditional settings use 80 as the overbought, while 20 as the oversold. The theory behind this indicator is, during an upward trending market, prices tend to close near their high. It indicates that the stock is under buying pressure. It may be topping out and trend reversal is at hand. Okay, while during a downward trending market, prices tend to close near their low. Okay, so indicates that the selling pressure is existed. Okay, now we go to the interpretation. Okay, how to interpret the indicators, okay, by using stochastic. Okay, so stochastic, okay, come into two types, which are percentage K and percentage D, measured on a scale from 0 to 100. Stochastic D is used as a signal line for stochastic K. Okay, K is the fast, more sensitive indicator, while D is slow and takes more time to turn. In order to know where is the buy and sell signal, okay, we look into the K line crosses above the D line in the oversold range, which is below 20, while the K line crosses below the D line in the overbought range, which is above 80. This is an example of stochastic reading, okay, from the chart. Okay, we could see here, Okay, so this one, all right, so we could see we could see here that when the line, this line, okay, crosses above 80, okay, and going down, right, so this is the point of selling. While when the line, okay, crosses below the oversold range 20, right, so this is buy signal. And also we can look into the blue and red line. Okay, when the blue line crosses below the oversold range, okay, and then going up, so this is the buy signal. Okay, and vice versa. All right, understand? Now let's take a look into this graph on how to interpret and analyze, okay, the stochastic indicator from this graph. Please read carefully and try to relate with the graph. Okay, and then you may also refer to this graph. Okay, we could see here the buy signal and as well as the sell signal occurs, and then this is also the trend line. Okay, the pattern, the support resistance. Okay, so the chart shows crown castle with a breakout in July to start an uptrend. So overbought readings were ignored because the bigger trend was up. Okay, so chart shows auto zone with a support break in May 2009 that started a downtrend. Okay, so with the downtrend in force, oversold readings were ignored because of the bigger trend. Okay, so this one also. Okay, bullish divergence. Okay, so you may also see the bullish divergence occurred, okay, in February to March 2010. Okay, notice how the stock moved to a new low, but the stochastic formed a higher low. Okay, there are three steps to confirming this higher low. The first is a signal line cross and or move back above 20. A signal line cross occurs when K, which is black, crosses D, which is red. Okay, this provide the earliest entry possible. Okay, the second is a move above 50, which puts prices in the upper half of the stochastic range. And the third is a resistance breakout on the price chart. Notice how the stochastic oscillator move above 50 in the late March and remain above 50 until late May. Okay, all right. Okay, so this is how to identify the bearish divergence. Okay, so the signal line crosses and moves below 80 did not provide good early signals in this case because KSS keep moving higher. So the stochastic oscillator moved below 50 for the second signal, and the stock broke support for the third signal. Okay, signal line crosses or moves below 80 and moves above 80 are frequent, above 20, sorry, are frequent and prone to whipsaw even after KSS broke support and the stochastic move below 50, the stock bounced back above 57 and the stochastic bounced back above 50 before the stock continued sharply lower. Now we go to William percentage R. Okay, so was developed by Larry Williams. Okay, so Williams R is a momentum indicator measuring overbought and oversold levels. It compares stocks close to the high-low range over a certain period of time, usually 14 days. Williams R oscillates from 0 to 100. Okay, how to read? Okay, readings from 0 to 20 are considered overbought, while readings from 80 to 100 are considered oversold. How to interpret? So the buy signal occurs when the Williams R indicator is below the oversold line and then rises to cross over the 80 line. The Williams R indicator is above the overbought line and then falls below the 20 line. This is a sell signal. Okay. Look at this graph and the interpretation, okay, for this William R. Okay, so chart shows arch cool with 14 days Williams R hitting overbought and oversold levels on a regular basis. The red dotted lines mark a move below 50 that occurs after an overbought reading. The green dotted lines mark a move above 50 that occurs after an oversold reading. As noted above, overbought is not necessarily bearish and oversold is not necessarily bullish. Top and bottom pickers can act when overbought or oversold, but it is often prudent to wait for a confirmation move. A move below 50 confirms a downturn after an overbought reading. A move above 50 confirms an upturn after an oversold reading. Okay, so this is the graph, okay, that you are going to look and identify the buy and sell signal, which is applicable for your assignments, right? Okay, so we look here. So we have 5 selling signal here and also as well as with the buy signals. Okay, so we could see from the graph. Okay, all right. Okay, so that's all for William. Okay, William R. So now we have come into the end of our chapter 5. Okay, let us make some conclusion on the differences, okay, between each indicator. Okay, so we have SMA, where is the buy and sell signal, simple moving average, okay, double, single and double, where is the buy and sell signal, EMA, envelope, Bollinger Band, right? As well as the RSI and ROC. Okay, so this one, all of this you must understand and remember. Okay, and lastly we have stochastic and also William percent. Okay, so I hope that okay everyone understand, okay, and should be able, okay, to apply for your company analysis assignments as well as the other assignments. All right. Okay, so that's all for chapter 5. Okay, and then we have another one chapter which is about the stock market analysis. That is purposely for discussion during the class. Okay, so I hope that everyone will get some benefits. Okay, this some of the knowledge where you may use for your own investment decision. Okay, as well as this may be a stepping stone for you in order to maybe become a remiser one day, inshallah. All right. Okay, thank you everyone and assalamu alaikum.